Okay, what's up traders? What's up tycoons? Super excited for today's video. We're going to break down ticker symbol TRAC. This is Origin Trail. Now, this is a viewer request. I do those viewer requests every single week. So if you want a channel where your stocks, your cryptos, your bonds can get analyzed for you in a timely manner, all you have to do is comment down below and I'll make a video on it as soon as I can. We're going to learn a lot in today's video. We're going to go over supply zones up here. We're going to go over demand zones. We're also going to cover the RSI and how you can use this to spot possible entries and also possible exits. We'll then go over our Fibonacci retracement levels. There's three main levels: the 38.2, 50%, and 61.8%. Those are the three most important retracement levels. And once you start to use those and understand those, you can really get a good grasp on understanding price action and how things are moving. Okay, so make sure to smash the like button, subscribe to the channel, and we'll jump straight into it. So the first thing we're going to start off with is our demand zone here in green. Now, if you're not familiar with demand zones, it's kind of like support and resistance, but rather than a strict support line, okay, it's actually going to be a zone. And all that is demand is buyers. So what that means is that in this zone, there is buy orders, right? They could be limit orders, they could be market orders. And each time we come into this zone right over here, we get orders filled, right? We touch it over here, orders get filled. We come in here, orders are getting filled. We come in here, orders are getting filled, right? And when you wick down below, these are what's called liquidity grabs, okay? Because a lot of people may have a stop loss right here at the very bottom, and market makers want to push the price up higher, okay? Or big money or whales. So what they'll do is they'll drop the price below your range and trigger some stop losses, and then now they have that liquidity, okay? And so they're able to get the play that they wanted and really ride things back up, okay? So, you know, we've tested this demand zone multiple times already. The more times you test a zone, remember, these are orders getting filled. So we've had a lot of orders get filled here. We had a couple orders get filled here. We had a few orders get filled here. We had a lot get filled in here, and we had some get filled in here. We need to be cautious if we do drop back down into this demand zone. We have to ask ourselves, is there still going to be more orders and more buyers? Okay, the more times you test a level, the weaker it gets. Now, the same thing happened up here on the upside. Okay, this is our overhead supply zone right here, and if you see, we come in here and supply is just an imbalance of sell orders, right? So what you want to do is you want to trade the areas of imbalance and not really trade no man's land, right? That's going to be this black area in here, because you're not sure if it's going to go higher or if it's going to go lower. It's much more risky that way. This way you have a well-defined risk to reward ratio. And as you can see, there were plenty of liquidity grabs up here as well, where price just spiked up, but these are all wicks, right? So these are very instantaneous, right? You know, we're looking at the daily time frame. So, you know, in a quick period of time, we shot up all of here. And what do? We end up pushing back down. Okay, same thing over here. The price shoots up, but it doesn't stay there, right? It's grabbing liquidity to the downside over here. All the people chasing it and buying in up at these levels, you know, the sellers are coming in and pushing the price down ultimately, right? So that's a quick synopsis of supply and demand zones. Okay, our overhead supply zone that you need to be cautious of is going to be 0.243 all the way up to about, let me move my head out the way real quick, 0.271. Okay, this is our overhead supply zone area to be cautious at. All right. Now, remember, just like demand zones, the more time you test those zones, the more time you test those areas, the more time orders get filled, and you could end up breaking through this level. So if we come up here, it doesn't mean that we have to pull back. It just means that we know that there's been an imbalance of sell orders pushing the price slower, and that may happen again. Now, let's go over what we're looking at currently. Okay, we do have a bullish chart pattern known as a cup and handle right here. Okay, so we have our cup, we pulled back, we started to form a handle. All right, and this could take us, right? So if what you do is you take, you know, the bottom of your cup up to the top, all right, and then you're going to go ahead and take that line, put it above, all right, and you'll get a move, an expected move of a cup and handle breakout somewhere like this. Okay, so that's what we're kind of expecting if we are able to break out past our high, which is going to be right here. This is our breakout level. So we really have to get past this level right here. And then we have the chance of possibly breaking out. Okay, now you do need to be cautious of a look above and fail. All right, so if we break through here, come in the supply zone and then shoot back down, that's going to be kind of a bearish signal. All right, that's not exactly what we're looking for. However, if we do pull back, there's three major support levels. Okay, the way these work is nothing moves in a straight line up or a straight line down. What you do is you move up, you retrace, and then you continue up higher, or you move down, retrace, and continue down lower. This is how you spot trend continuation. So we're looking to see if we're going to get an ABC trend continuation move to the upside to our overhead supply zone. If you take a look, we already pulled back a little bit, and look at where we pulled back to our 61.8% retracement level, which is going to be 0.1851. If we break through this level, then we could be spotting a reversal back down to our previous demand zone. And we know that we've tested this demand zone a lot and filled a lot of orders in this area. And we need to be cautious because the more times you test it, the more orders get filled, and you could break through there as there's not enough demand and not enough buyers present in the market anymore. Now, let's also go over the RSI real quick, okay? So we're going to go over something known as bullish divergence, all right? If you take a look, we're going to draw some circles on the chart right here. So here we have a low, right? And over here we have a lower low. Now let's take a look at what the relative strength index is doing. It's making a low and then a higher low. So the price of the token is going down, decreasing, but the relative strength of this token is increasing. That's known as bullish divergence. Okay, and as you see, we do get a sharp move to the upside shortly afterwards. It's an indicator you may see bullish activity. Now, you can never predict how much of a move it's going to be. It could be a 5% move. It could be a 50 or a 100% move. Crypto is very volatile, but these are some of the signals and strategies that you can use to spot possible entries. Right now, take a look over here. What do? We do the same exact thing, right? We have, well, in this case, we have a low, we have an equal low, and then we have an equal low again. So we're really flatlining right there. If you notice, we have this level of support basically where we're flatlining. Okay, but if you take a look again at the relative strength index, we made a low right here, a higher low, and a higher low. So as price remained constant, we saw a divergence, which just means something different is happening in the relative strength index, and it was increasing, right? It was increasing in strength as we were remaining constant in price, indicated we could see some bullish activity. And sure enough, we got a sharp move up to the upside in our new established overhead supply zone. Now, what I want you to take a look at is you can also spot these on a long-term basis, right? So if you take a look, here was our initial bullish divergence that we first started to form. These two levels, right, where we made a low and then a lower low. And then here we made a low and then a higher low, okay? If you extend this trend line out, look at where we bounced. We bounced over it right here, and then we ended up getting a move to the upside. Okay, we also bounced on that trend line right here. Okay, that same trend line from this area, we bounced on it right here, and then we got to move to the upside. And we also bounced on it again right here and got a push to the upside. So we're doing a good job of holding this bullish divergence trend line. If we come back down and break below this bullish divergence trend line, then there's a strong possibility we're either going to pull back into our demand zone, or if we're already in our demand zone and we break this, we pull back and break this trend line, and most likely we're going to break this demand zone and establish some new lows. Okay. Now, if we zoom in just a little bit, okay, so things can be a little more clear for you guys, we do have what's known as a slight bearish divergence, okay? It's much smaller, right, in an extended period of time. We do have a high here and a slightly higher high. So we are making relatively higher highs on a small time frame basis, but look at our RSI. We have a high, a lower high, and we have this trend line here now established, and we're testing it, okay? We need to break out past this trend line. And if we break out past this trend line, we could possibly get our cup and handle breakout. But for now, it wouldn't surprise me if we do get some type of a pullback to our three major retracement levels. Okay, as those are, the major levels that we do need to hold as support to continue to go higher. And we do have a slight bearish divergence. Okay, so, just stay on the lookout for that. If we keep rejecting this trend line and rejecting, and then we come back down here and test our bullish divergence trend line and break that, again, those are the signs that we could be getting a move to the downside. Now, I want to zoom out a little bit, okay? So we've zoomed out a little bit, and the reason being is because I want you to see the larger scale of things, right? So take a look at your MACD, all right, and look at how volatile it is, going up and down, and you're seeing these big volatile swings up and down, up and down, up and down, right? You're seeing these big movements, and it's corresponding with the MACD. Well, look at the MACD right here, okay? Since basically summer, all right, we've really just consolidated in this very tight range right here, okay? So, and then if you look at the actual chart too, we're consolidating in this very tight range of our supply and demand zones that we've been respecting for the entire summer of 2022. Now there's three stages to a reversal. Okay, the three stages are your downtrend. Okay, then you get the box consolidation, which is what we're experiencing right here, box consolidation, and then you get the uptrend. All right, now this isn't a guarantee. These are just the three stages of a reversal, right? It's entirely possible that we could consolidate and break down out of here, but ultimately, we're going to look to see if we can get that third stage of the reversal and break our overhead supply zone and really start a possible reversal back to the upside, right? The MACD has just been very, very flat. We're not seeing it. We need to see this go down to the bottom, right? Or go down to the top and really break out of this range in here, as it's just been consolidating, guys. So I just wanted to show you guys that real quick and have you zoom out. Right now, this could entirely be a giant bear flag, right? A bear flag would look something like this. Let me go ahead and make this red real quick so it's a little easier to see. So a bear flag could be something like this, right? And this could just all be bear flag consolidation, or this could be, the two stages of a reversal where we have the downtrend and then we have our box consolidation. And then if we break out, there's a chance that we could get some type of reversal. So, on the grand scheme of things, be patient. If you're looking to do shorter term trades, I'd just be cautious. We are trying to get that cup and handle breakout. We know our major support levels to the downside if we do pull back. And yeah, that's going to be it for today's video. Okay.